Let's understand what is discounting of bill. Let's say A is selling goods to B. The worth of goods is say something like 10 million. B is not in a position to make the payment immediately. So A is drawing a bill of exchange, B is accepting the bill of exchange, and B is sending back the bill of exchange. Fine. But the problem is A does not have sufficient money now. So he thought he'll get money from B. No, B is only ready to accept the bill. So what the A will do, A will approach his bank. A will go to his bank and he'll say he's in need of money. So the bank will ask for some security. So what A will do, A will produce the bill of exchange given by B as security to bank. So the bank will in turn give money to A. When they give money to A, what the bank will do, they'll see what is the credit period, and based on that they will collect the interest for the loan upfront itself. Okay, and this interest which is collected upfront will be called as discounting charges. Now to understand, look at here, the goods that was sold by A to B is 10 million. So B had given bill of exchange. That bill of exchange is presented to bank. Now let me tell you, the credit period is say something like 6 months. Okay. So the bank knows that this money will come back to A after 6 months. So for 6 months they cannot repay the loan. So for the 6 months they have to pay interest. So the bank says they will charge interest at 10%. So on 10 million the bank should charge 10%. That works out to 1 million per annum. Okay, but the credit period is only 6 months. So they will charge only for 6 months, right? 6 by 12. So on 10 million, 10%, and they are going to collect it for 6 months period. So it is going to be 0.5 million. So the bank will give a loan. Okay, the bank will give a loan of 10 million, but they will collect this interest upfront. So 10 minus 0.5 million, that is only 9.5 million will be received by Mr. A as loan. So what is this remaining 0.5 million? This is nothing but discounting charges. Right? Now let us try to understand the accounting aspect. When A sells to B, it is a normal credit sale, right? When A sells to B, that is sale entry. Sale entry is normal, that is B account debit to sales account. This is in the books of A. Let us focus only in the books of A now. Then A is preparing a bill, sending it to B. B is accepting the bill. Okay, B accepts bill. In that case, what happens? Bills receivable is coming in, bills receivable account debit, and giver of benefit is B. So to B account. Now this bill is presented to bank. So the bill is going to bank. Debit what comes in, credit what goes out. Bill is going to bank. So when bill is discounted, the credit will be to bills receivable account. What about debit? There will be two debits. One, the amount that is received in the bank. Number one. Number two, the interest charges which has been or which have to be paid. Okay, the amount that is received in the bank, and number two, the interest charges that has been paid. So what is the amount that is going to be received? It will be only 9.5 million, and 0.5 million is going to be interest. So there will be one debit for the amount that is received, bank account debit, and the next debit will be for discount charges. So discount charges account will also be debited, and credit will go to bills receivable. So on the due date, the bank will send the bills receivable to the drawee. Okay, so drawee will make payment to bank. So it's a transaction which got settled between bank and the drawee. So it is very similar to endorsee and drawee, right? In the previous session, we have understood endorsement, where we are endorsing the bill. That is, drawer is endorsing the bill to another party, and that another party is nothing but supplier of drawer. Okay, here the another party is not supplier, rather banker. So banker will present the bill on the due date, so drawee will make payment.
How to read balance sheet, how to perform financial analysis using ratios, cash flows, fund flows, how to do financial modeling for bank loan purposes using CMA report and cash budget, how to assess credit facilities like cash credit, overdraft, letter of credit, bank guarantee, term loan. If these are all the areas you wish to learn and achieve mastery, we can help you out. Our comprehensive course, Credit and Financial Analysis Mastery, is for you. To know more details, just come and see FAMB. I'll share the details with you.